Welcome back to Macroscope. In this video, we'll break down the most important macroeconomic data released last week across the US, UK, Eurozone, Japan, and China. We'll explore inflation, employment, and business activity trends, and what they signal for the global economy and markets. Let's dive in. Summary of data performance for the week by country. United Kingdom. 4 out of 4 housing data releases improved from prior. 2 out of 4 beat forecasts, mortgage approvals and house prices. Labour, unemployment claims improved. United States. 5 out of 9 labour data releases beat forecasts, and 6/9 labour data improved from prior. GDP growth, consumer confidence and income all showed strength, multiple beats. Housing was weak, 0 out of 4 beat or improved. Euro area, France, GDP and inflation generally beat forecasts, some weakening in prior comparisons. Germany, 2 out of 3 labour indicators better than forecast and prior. 1 GDP beat, 2 improved. Retail sales were strong. Japan, labour, industrial production, and retail beat or improved. Manufacturing PMI and consumer confidence worsened. Starting with housing and real estate data. United Kingdom mortgage lending rose to $5.34 billion, more than doubling the prior month's $2.21 billion, and mortgage approvals also came in strong at 64,17,000, beating the forecast of 62,500. Nationwide house prices bounced back, plus 0.6% month over month, reversing a prior decline, and plus 2.4% year over year, also slightly up. So, a solid rebound in UK housing momentum. United States, the picture here is softer. Pending home sales fell, down 0.8% month on month and 2.8% year over year. The S&P Case-Shiller Index showed plus 2.8% year over year, home price growth, a deceleration from 3.4%. And the MBA 30-year mortgage rate edged down slightly to 6.83%. Housing in the US looks stagnant at best, so the takeaways are UK housing gained momentum. Lending, approvals, and house prices all rebounded. US housing weakened. Sales fell month on month and year over year. Price growth slowed. Mortgage rates eased slightly. Next on to employment. United Kingdom. Job market remains tight. Unemployment benefit claims dropped by 21.6k, almost double the prior drop. That's a good sign. United States, a mixed bag. The ADP report came in strong, plus 104k, beating expectations and flipping from a prior decline. But JOLTS job openings fell to 7.43 million, and initial jobless claims ticked up to 218k. The unemployment rate rose to 4.2%, while non-farm payrolls came in light at just 73k, well below forecast. Still climbing, plus 3.9% year over year and plus 0.3% month on month, and the ISM Manufacturing Employment Index dropped further to 43.4, showing some cooling in factory hiring. Germany. Unemployment rose just plus 2k, much better than forecast and down from prior month. Jobless rate held steady at 6.3%. Japan. No change. Unemployment steady at 2.5%. Very tight labour market. So the takeaways are UK jobless claims fell sharply. Labour market remains resilient. US employment data was mixed. Wage growth is solid, but hiring is slowing and unemployment ticked up. Germany held steady on unemployment. Japan remains ultra tight with no changes. The global labour markets are stable, but showing early signs of softening, especially in the US. Up next is consumer trends and confidence. In the United Kingdom, consumer credit rose to $1.41 billion, up from 0.92 billion. Spending appears to be picking up. United States, confidence is improving, rising to 97.2. Chicago PMI climbed to 47.1, and the Michigan Sentiment Index ended at 61.7. Still low by historical standards, but all moving the right way. Japan. A slight slip. Consumer confidence fell to 33.7, down from 34.5. Retail and inventories. United States. Retail inventories, ex-autos were flat, but wholesale inventories rose 0.2%, reversing a prior drop. Personal income and spending both rose 0.3%, showing solid household demand. Germany. Retail bounced back, plus 1% month-on-month, and a strong plus 4.9% year-over-year growth. That's solid. Japan. Retail sales rose 2% year-over-year, up slightly from 1.9%. So takeaway is European consumers are still cautious, and in Germany, sentiment is falling, UK consumer credit is rising. Spending appetite is back. US consumer confidence and sentiment improved across surveys, and Japan saw a slight dip in confidence. Manufacturing and industry United States, ISM manufacturing, PMI slipped to 48, still contractionary. While the Chicago PMI rose a bit, but still weak. Japan. Encouraging signs. Industrial production rose 1.7% month-on-month, beating expectations. But both the MBS and Caixin PMIs came in below 50, at 49.3 and 49.5, signaling contraction. So the takeaways: manufacturing is still in a fragile state globally, but there are pockets of resilience. Inflation, United States. PCE inflation continues to rise, plus 2.6% year-over-year and 0.3% month-on-month. Core PCE also up 0.3%. Wage pressure is still there. The employment cost index held steady at 0.9% quarter-on-quarter. Germany. Inflation cooled a bit, month-on-month down to plus 0.2% and year-over-year held at plus 1%. France. Slight uptick, month-on-month inflation plus 0.3%, while year-over-year held steady at 2%. Euro area. Flat overall. Year-over-year. Inflation unchanged at 2%, core at 2.3%, but month-on-month inflation fell to 0%. Big week for central bank activity. United States, Fed. Rates held steady at 4.5%, and Fed speakers offered no major surprises. Japan, BOJ. Also steady at 0.5%, and the quarterly outlook was postponed. Market interpretation. US Fed held rates steady, no major policy shifts. BOJ also unchanged. Their quarterly report was delayed. Let's summarize the global picture. Zooming out, here's what the latest data tells us. Housing. The UK housing shows signs of recovery. US remains sluggish and sensitive to rates inflation. In the US is firming but remains under control in Europe. Manufacturing. Manufacturing is still in a fragile state globally, but there are pockets of resilience. Consumer sentiment. In the West, it is rebounding, but Japan is showing some hesitation. GDP is growing in the US and Germany, but not in France's central banks. Banks are staying cautious. No rush to act, but watching inflation and labour data closely. So what are some of the implications of last week's data, and as a macroeconomic investor, how could you play this? Macro play. The United States economy is re-accelerating, but uneven. With strong US growth and sticky inflation, USD may remain supported. However, the Eurozone stagnation could weigh on the euro, especially if inflation drifts lower. This could be traded by fading the Euro-USD rallies. Keep an eye on labour softness and global PMIs next week. They may signal more about central banks' next moves. Buying gold. Potential upside if inflation persists and growth weakens. Keep an eye on real yields. Subscribe for more macro updates and drop your questions below. Thanks for watching, stay informed, and see you next week.